welcome Mr. Michael Wong, Managing Partner and COO from My Capital. Welcome, Michael. And next, let's welcome Mr. Thomas Morel, Chief Product Officer of Polymath. Mr. Cyrus Wang, Partner of STI Financial Group. Mr. Julian Kwan, CEO of InvestorCrowd. And last but not least, Mr. Ricky Ng, Chairman and Founder from iHouse.
So hopefully our audience will have a bit of understanding on digital securities or STO. Because today we have a very strong list of panel speakers ranging from insurance companies, distribution platform, traditional finance people, as well as exchanges and on our panel. And before we talk more and jump onto the discussions, because we have 60 minutes, that's why we want to jump on introductions, starting from Ricky.
So, hi everyone. So, I'm the chairman and founder of iHouse.com. Personally, I'm an engineering guy, so that you see I'm so a little bit different from the finance like guys were. So, from my understanding, because we start to do the real estate tokenization project since like beginning of like this year, so that we see that the trend is like changing really fast, and we talk about lots of regarding like how utility tokens works in real estate before, but right now because of like 6 months ago, the US market start to investigate the STO. Yeah, so that we talk about like security token right now. So definitely we think that it's a huge market that apply to real estate and also securities that are related to both share benefits or like any financial products. So yeah, we are also right now working on investing in an exchange that can issue both, can trade utility token and security token in the secondary market. Yeah.
Julian.
Thank you. My name is Julian. I am the CEO and founder of InvestorCrowd. We're a broker-dealer out of Singapore. We focus on private equity, real estate, venture capital. We got excited about the security token space about 18 months ago. We got laughed out at a lot of the blockchain conferences back then. Now it's the key subject of the blockchain conference, so that's pretty interesting. But yeah, look, I think for us we see a really amazing opportunity where shares in private investments will be able to seek some liquidity. That's been the biggest challenge for all private equity investments. So first week of January, I think we're going to launch the first institutional grade asset-backed real estate security tokens. We're the first in Asia, and we've also started building a security token exchange in Singapore.
Hi, this is Cyrus. I'm a partner at STI Financial Group. It's an alternative investment group in the business of both fund management and direct investment. One of its portfolio companies, Plutux, for which I'm a CEO at, is a security token exchange in Asia.
Hi everyone, Thomas Morel, Chief Product Officer at Polymath. Polymath, we're a security token issuance platform, so we provide the smart contracts, the web interface, the technology to do security tokens with trading restrictions, volume restrictions, as well as a marketplace that sits on top of it for issuers to engage with broker-dealers, engage with lawyers, KYC providers, custodians, to form their team with the intention of doing a fundraise leveraging our technology. We've been live now for about, since August 7th, so that'd be 4 months. About 56 tokens have been created so far, and we're seeing traction across a variety of instruments, ranging from real estate being one, to funds tokenizing themselves and leveraging blockchain to do a more efficient way of distributing dividends, as an example, as well as companies just doing straight up equity and wanting to represent that equity on chain.
Hi everyone, my name is Michael Wong, and I am the co-founder and CEO of My Capital. So My Capital is a SFC licensed fund manager, where we actually are one of the first with the ability to invest in blockchain related assets. And because we have such a license and the team, we actually further venture into the STO space. So we're building a platform called MyBlocks, which focuses on tokenizing or securitizing real estate over blockchain, and thus leveraging My Capital's license to help us to provide an end-to-end service from tokenization to issuance and distribution.
So yesterday night I was approached by my friend and telling me on WhatsApp that he wants to sell me digital securities of a New York building on WhatsApp. So it made me start to think about the difference between utility tokens and security tokens, because in the past few months, obviously a lot of our friends approach us for ICOs on Telegram, on WeChat, but it seems not appropriate for security tokens to be promoted in that way because it's securities by definitions, right? So my first areas to explore with you guys is the difference between utility tokens versus security tokens. Apparently, because in case I haven't explained it earlier, the first question is really about the legal implications and corporate governance around security tokens. How do you think it's different from utility tokens? Maybe we can start from Cyrus, because your background in traditional finance as well as in digital asset.
So just to clarify, the question would be?
The legal implications and corporate governance. The difference between utility token and security token.
Right, starting with security token, it's actually just a digitalized and virtualized representation of a traditional security. So by security, there could be forms, as Adrian earlier presented. There's equity, there's debt, there's title, or there's the derivatives, being the cash flows coming from those verticals. So it depends on which class. There will be different treatments. Speaking currently in Hong Kong, then this space will be regulated by Securities Futures Commission, and by definition they would define it as anything being an equity, debenture, or collective investment scheme, or a derivative of such would be considered a security. The governance, without dwelling into the details, would be encompassed by the entire Security Futures Ordinance, which is written by SFC. And so it's quite different by nature versus utility tokens, which is much more like a product that you can buy off the shelf in online or retail space. In terms of governance, yeah, SFO would be the governance manual for this class of securities. Security tokens.
So what about the US side, Thomas?
I mean, the way I would separate security tokens from utility tokens in a very simplistic way is, if I issue a security token and that security token gets distributed to a variety of investors, as the issuer at any point in time, I have to be able to say, here's my list of shareholders. With a utility token, you don't have that, right? Some early ICOs did no KYC at all. Subsequent ICOs, sort of second generation ICOs, did KYC at the original point of issuance, but then whatever happened in secondary trades just happens. And so there's no way, nobody knows who has, there is no list of who holds Ether, for example. In the security space, it just doesn't work that way. You have to be able, as you've shown in your demonstration, you have to be able to say, here's my shareholder registry, this is how much they hold, jurisdiction they belong to, etc. And so having that ability to do on-chain enforcement of all those capabilities is truly what, in the most basic, most simplistic way would separate it. a security token from a utility token. From a jurisdictional standpoint within the Americas, what we see as sort of the prime market for security tokens is predominantly around professional investors, accredited investors, but all rooted in KYC and ML.
Yeah, I think one of the best ways to think about it is that the issuer of a security token cares who owns them, who's on your cap table. Issuers of ICOs did not care. When you don't care, there's obviously a million things you don't worry about.
So Investor Crowd's email with the title "Security Tokens and not ICO" recently. Send out an email with "Security Tokens and not ICO."
Yeah, we did that this morning. Yeah, they're not Bitcoin, they're not cryptocurrency, they're not ICOs. The connection is the same technology. But that's one of the easiest ways to look at it. So I think that the issuance of the security tokens are just simply emails better than paper, digital shares are better than paper shares. We're going to be able to trade these things on platforms that we're all building. It's going to be infinitely better, faster, cheaper, and there's currently just a lot of confusion in the market because we're also launching the security token industry in the wrong space. We're launching it in blockchain conferences. It should be launched in private equity conferences because it's traditional investing, but it's good that we're here anyway.
And even when you go beyond the primary issuance, right? As soon as you talk about a security, there's this additional constraint that can be imposed. So as a non-reporting entity that has issued a security in the US, I have a maximum of 2,000 investors. In Canada, it's actually 50. And so for utility tokens, there is no such limit. You have, under the SEC, you have Rule 144, the maximum volume of trades over a finite period of time that, I believe, is 0.1% of the assets available. So all these restrictions sort of constrain or put boundaries around what you can do. So the shareholders registry is one big piece, but then there's a lot more than that. There's a lot more to it than even just KYC and that.
And obviously the legal perspective is very different for security tokens. When it comes to utility token, we have been talking about decentralization, the peer-to-peer functions of a gaming coin and various type of tokens. So do you guys think that the extent of decentralization matters in the security token world? For instance, do you require a token to run the platform, or is it sort of more centralized mechanism will work in this space?
Yeah, I think from the let's see how we define what is utility token and versus the security token. So let's put real estate as an example because we have worked on this industry for a year already. So issuing a utility token for a company is simply just like issuing a good or services. So that it is like the one that buying the utility token is more like a customer from the definition of the SEC issuing regarding the security. So that they don't even classify like Bitcoin or Ethereum as the security token. They classify them as the utility token because people buy them because of they can use it, they can store it, they can use it just like as a service or as a good there. But for issuing security token, it's totally different. It is under many security law in both US, Hong Kong, Singapore. There's many regulation there, and then we need to follow the security laws in each country. So it is more localized actually. So that I think the definition of both tokens is quite different. So that it applies to different markets, it applies to different customer, and also just like put real estate as an example. For utility token used in real estate field, it is more like timeshare in the hotel sector. But for the people investing in STO, it is really related to the security, the return, the valuation of the property. So that is quite different in terms of the benchmarking. Yeah.
I think in relation to your question on centralization, I think naturally when STO, in the beginning of this STO space, is obviously more centralized than ICOs. For various reasons, in particular related to regulation, right? So every country, every jurisdiction has their own rules on how and what you can do with relation to STOs. And so that naturally limits to how decentralized you can be. But I think as this industry progresses and as technology actually picks up and the regulatory rules kind of matures, you can actually apply these on using technology, using blockchain to enable even more decentralized way. So I think it's a progression.
Well, I would say that there's a limit to how much decentralization you can actually apply to securities. And so to elaborate, to articulate the point, I'll just take a simple example, which is loss of private key. Right? So in Bitcoin, there's an estimated 5 million Bitcoins that were lost due to private keys that were being lost. So let's apply that to a company. So let's say I tokenize my company, I'm going to issue 100 tokens. Each token represents 1% of the company. And you own 20 of those tokens. You lose your private key. Does that mean that now 80% of the 80 tokens represent 100% of the company, and your 20% are gone? No, your 20% is still there. The company hasn't changed, right? The revenue that the company was providing hasn't changed. So there has to be, by law, a mechanism that allows for your equity to be reissued, which means there has to be an authority somewhere that has the ability to either mint new tokens or go in your old wallet and move those tokens from your old wallet to a new wallet, which is completely ethos breaking when we talk about cryptocurrency, right? I mean, the hardcore crypto hodlers will tell you, I lose my private key, it's my fault, I deserve to lose the money that was associated with that private key. In the world of security, it doesn't work this way, right? And there's people that claim that it would be okay to lose equity this way, but how do you represent the company at that point? The company itself hasn't changed. So unless regulation changes fundamentally and the way we look at equity changes fundamentally, the amount of decentralization that will be applied to security tokens is going to have a cap.
Yeah, I think we agree, and I think that the goal of the industry is to bring as much decentralization into the transaction process and the record keeping and the storage. At the moment, though, the one word missing in most STO discussions is decentralization. Whether it's because it's legal, but also because does it really matter so much? You know, as everything that Thomas kind of reflected there. So I think that's the hybrid model where you start talking about the private blockchains, where you're still using the technology, but there's a centralization component to it. And then think about it again. When I issue shares in my company, I want to know who they are at all times. I don't want 20,000 unknown addresses as my investors. I can't take that risk, and I just don't want to. So there's going to be these hybrid structures, and complete decentralization in my mind just isn't even needed, or people don't really care, because at the end of the day, you want your share just to be there, and if you lose it, you can still go back and get it. You don't really care what protocol it's on, you don't really care what type of blockchain it's on, even though the protocols would disagree. But you just don't, and I don't think you ever really will. You'll have a share in a building. You won't care if that share is an Ethereum token that's a share in the building or an EOS token.
To resonate on what Thomas and Julie just said, decentralization has a lot of its own benefits, but again, a lot of people are worried about security. Now that we're talking about security tokens, which is essentially this digitalized assets, there's a hybrid model, right? Like in a traditional company, if you issue bearer shares and you dropped it or burned it or your dog ate it, there's ways to reissue it. And that part is the non-decentralization part. That part is the hybrid that everyone has been talking about. In a technical manner, for instance, that's basically what non-fungible tokens are for. So if you have marked specifically shared number certificate 123 on the SPV that has stored the cash flows of a company or stored the cash flows of a debt portfolio, and you lost your wallet, lost your private key to it, technically that SPV has governance of its own. Like the board or the foundation could reissue, reprint, remint on a blockchain manner. share 101, 102, and 103 to replace number 1, 2, and 3. So security risk could be mitigated as such. At the same time, custodial solutions have also been maturing through time. So there's a lot of vendors that I see in the crowd that's offering custodial solutions. Yeah.
So, last year I have been trying to buy a lot of utility tokens, right? And there's huge demand for utility tokens. I tried to enroll in an ICO and I was squeezed out after 30 seconds. Never got it, right? In security token space, putting aside all the legal perspective, how decentralized it is there really a demand to buy security tokens? Is there demand from traditional investors? Is there demand from crypto investors? Julian, yourself, you are CEO of InvestorCrowd. Obviously, you will know a lot about the demand-driven approach in this space. So what's your view?
Demand for STOs? Well, our view is that in the future, every single security offering will be a digital security, or will be an STO. You have jurisdictions around the world now that are investment jurisdictions, like Cayman, BVI, Delaware, Wyoming. They're already offering, or very close to offering, digital share issuances, because if you're a government, you issue 50,000 new companies each year, wouldn't you rather have them digitized and just for your own management? So for us, this will not mirror the same trajectory that the ICOs had, which was kind of straight up and straight down. This will be a more slow, progressive growth to a point where, like now, where I refuse to sign paper contracts. I only use online, but if you go back 5 or 10 or 20 years, people were like, oh, is the email really, is that really it? It's got to be on paper. So this is the future of share issuance for every single company on the planet. It's just at the beginning. Demand, as much as new companies will be issued and funded.
I think it depends on what at the end you're selling. I mean, is your product differentiated enough? Meaning, is it something that was never available to these buyers or investors before? I mean, if it's something that was not available because it was too expensive, it was too illiquid, then I think naturally demand will come. So that's why I don't think anything or everything can be tokenized or should be tokenized. But when the right assets gets tokenized, I think there is a pretty good demand out there. I was talking to some private banks recently regarding how they see this, because security tokens will be regulated in many jurisdictions, will be limited to selling to accredited investors or professional investors. That seems like a smaller pool of people that could play in this game. But even within that pool, there's a huge range of what people can get access to in terms of what they can invest. So I think there's a big enough space that will attract all sorts of investors, qualified investors who come in.
Thomas, because you mentioned that Polymath has over 50 tokens, as I remember, created. So after you create a token, do you see a lot of demands in buying these tokens?
So obviously, without going into too much detail, because you were talking about differences between security and utility. General solicitation is a big one, right? And so I'll have to stay sort of neutral on this, but we're seeing a variety of projects. Some have completed that fundraise very quickly. Some not as fast. So there's definitely a buy side and a sell side for it. The traditional, or the investors, the original expectation was for crypto investors to be sort of the first movers into that space. Now the crypto nuclear winter we're going through, I think as it was called earlier today, isn't really helping with that. But we're still seeing sort of mid-sized family offices, mid-sized institutional investors participate into those sales and invest into companies that are issuing security tokens. At the end of the day, if there is a deal to be made, if there's an opportunity to profit from that transaction, the buy side and the sell side will meet and they will agree on how that transaction can be conducted. And if tokens can add value, either in the short term or in the long term, then that won't be an issue, right? The legal documents are going to be there behind it to support it. And that's sort of what we see across some of the issuances that we had the opportunity to learn a bit more about, right? Being self-serve, we don't have the details on 100% of the issuances that are going through the platform, but the ones we know, that would be sort of the spectrum that we have.
So to address your question, there's two sides of the equation. There's a supply and there's a demand of these STOs. From a supply perspective, the asset owners have all the reasons to offer security tokens because they can fractionalize their assets, it's easier for them to transfer, and the settlement of it is a lot easier. On the demand side, I think the most important thing is the quality of these assets. These assets being equities, debt, and those cash flows, or the titles. The titles could be real estate or more intangible titles like a game intellectual property, for instance. At the end of the day, like in traditional equity capital markets, debt capital markets, or the ABS market, what dictates the demand is the quality of the underlying. So if you're able to offer, in traditional finance sense, superior risk-adjusted returns on, say, a debt portfolio, providing yield that gives you better than what most of the high yield or junk bond market can provide you, then people who appreciate that asset class, being debt investors, would then participate into the STO. And at the same time, it's, there should be theoretically more liquidity in this asset class because, for instance, in the debt market, there's a yield curve, and traders, quant people, quant traders or fundamental traders, they can market make around it, buying and selling around that yield curve. So I think it's the quality of these security tokens that people are offering that would dictate whether the institutional market or professional investor market will jump into this space.
Yeah, but I think, actually I think STO should be like growing very fast like from next year, and but it still takes time to like exposures like ICO last year, because when we talk to the like Ethereum founders, it actually takes 4 years for the projects and the market to accept this concept. So I think because they invest in like Ethereum since like 2015, and then last year we got like a huge exposure in terms of the ICO, and now it's like for all the crypto markets, there's around like 50 to 60 million users that trade crypto. They like Bitcoin, Ethereum, all the thousands like tokens. Okay, so I think STO from now on we start talking about it, start the regulation, but it maybe take another, for example, 3 to 4 years to grow to like to the market like last year. But of course it will be huger than before because just like internet, the curve is always like this, but not comes down again. Because when the application in internet getting popular, so that it will be like getting more and more users comes in, more and more supply and more demand. Yeah.
So obviously asset quality is something important. Another key advantage for STO is for investors to gain access to new kind of products, right? So before I came on stage, Ricky and I were talking outside just now in terms of tokenizing a gaming tournament team to provide access to professional investors. So my questions for you guys is, what kind of access you think are interesting except real estate for tokenization? I mentioned about closed-end funds, active actions, but what kind of demand are you seeing out there you think fractionalization work for that asset class?
So if there's a company with very stable and growing cash flows and that company wants to do a round, currently they have to find a financial advisor, but the bulge brackets will probably not entertain them because they look at their hourly charge, the underwriting fees, and it just doesn't justify for helping out an SME. But at the same time, this SME is not sufficient from a financial requirement standpoint to list on the gem board or main board. So where do they access such capital? Security token offering could be one of the channels. And another thing would be, say, bond. If you have to buy a bond right now, you have to buy at least 200K in terms of check size. But if you put in a Chun Kong bond into SPV and tokenize